Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Monday, May 10th, 2021. I wanted to do just an update. We'll keep this one on the broad markets. I updated some of the trade ideas out there in static posts this morning, and as I am starting the video here, it's 2:15 p.m. Eastern Time, and we are right at that those lows from last week. So that was, again, I should say, a pretty significant level to watch. We already had two key reactions recently, and that helps to validate it. That was also gap support from back here, and taken out. Keep in mind there is a as important, probably more important. I'd say even a more significant as much or more significant level here, about 324.32, and that of course is that level right here that capped all the advances back during the last 12% or so correction in the NASDAQ 100. So there it is. We had all those reactions there. Finally, the breakaway gap that put us on a buy signal, and then most recently we put in the divergent high and had several support level breaks, including that pretty significant sell signal when we broke 334 right there. To recap, we went back up. On Friday, we were trading at the top of the zone, actually just a hair above it at the time I did the video on Friday. But as you can see, we clearly failed there, and look at that. That line hasn't been modified. That candle did not manage to close above there. That 60-minute candle closed back down. The next candle closed right on it, and then the rejection. That's where we closed Friday, back in the bounce target zone, and then boom, back down below it today, and here we are. So that's just shows that the bulls had an opportunity there. It was a pretty impulsive thrust up to there, but now at this point it's been faded. That entire rally off last Friday's low has been faded. And the common theme here, not to beat a dead horse or sound like a Debbie Downer, I know the broad market has been extremely resilient. I recognize that, but the common theme I've been seeing for months now, keep talking about, is the market leaders. And again, go back in history, I've traded and invested for many, many years, decades actually, and it's never a good sign when the market leaders stop going up. Now, they haven't completely broken down, but again, like Apple, these are trading ranges going back to last year, July or August of last year. Apple still sideways, blowout quarter, best quarter ever, even a better quarter than the other couple weeks ago, and nothing but selling despite positive earnings. So whatever you want to take of it, it just shows these stocks are exhausted. That's indicative of the fact they were over-owned and over-loved, and you have to ask yourself how much of this great quarter, really, what's the market pricing going forward? Why are the institutional investors no longer buying? Because if they were, this last blowout quarter should have put Apple up to new highs. Now look, again, there's still plenty of support below, and most significantly, we have to take out for a much, much deeper correction, well into the double digits, 20% plus. We're going to need to take out the bottom of that recent trading range. Right now, again, should this play out, should QQQ break support, and we get a decent correction, 10% or more in the market, that certainly has the potential to bring Apple back down to the bottom of that multi-month zone, and who knows? We'll see what happens if we even get there, and if we do, where do we go from there? I'll give you one other level if you're an Apple trader. Really, the point of this video is to focus on the markets, but I always say a comprehensive analysis of the equity markets in this day and age, with the super top-heavy weightings of these top components, especially the NASDAQ 100, of what I call the FANG stocks, F-A-A-M-G, plus Tesla as well now, you're really remiss in analyzing the markets and not analyzing or factoring in what these stocks are doing, because again, the market can only go so far without them. It's that simple. It's mathematics. There it is, Microsoft, again, blowout quarter recently and nothing but selling. Previous quarter when they reported fourth quarter earnings, we had a little pullback to back test level. And look, this is still overall, I have to say this is bullish. The fact that they broke above the multi-month trading range of Microsoft, successfully backtested, and we're still above it right now. That's the bullish case. As long until unless we remain above that, There's an uptrend line there that comes into play as well. So if you're looking to go long Microsoft, if we do have more downside, there's your buy point. Anything much more than that, you enter the channel, you're probably going to go back down to the bottom of the channel, and that's all the way back to 199. That would be a drop from where we're at today of about 20%. So just keep that in mind, and the impact that would have on the market should that play out like that. And of course, we had the divergence, which I think I mentioned. I'll give you the bullish outlook there, or the bullish developments in Microsoft that have occurred recently, but the bearish developments are the divergences that we see on just about all these market leading stocks, as well as the major indexes. And there's Amazon again. A lot of these big fangs recently reported earnings that have been moving lower, steadily lower since. So you know, if you want to play the near-term game, hard to spin that as anything but bearish. Long-term trend is still intact, but the thing about trends, trend traders, it's great, buying pullbacks in an uptrend work until they don't work. It's kind of like a yogiism. It's, works until it doesn't work. And the problem with it is, a trend trader being a little late to the game to recognize when the trend is over. And that's why I use these support and resistance levels. So there's Alphabet. Big level to me comes in around 2152 or so. That's horizontal price resistance, the top of this trading range right here, as well as the primary uptrend line. Now let's get away from the fangs for a second, other than Tesla, which again I just wanted to update because this morning we were flirting with my 662-ish, we'll call it 660 support, and we've since broken down. We're down about 5.5% right now in Tesla. That is a sell signal. And barring some crazy stick save into the close today, there's an objective short entry on Tesla, and my target is pretty aggressive. We have the 200-day moving averages coming together, and I'd put very good odds on or pretty darn good odds, I should say, on a reaction on the initial tag of those. But ultimately, I'll still maintain this target I've maintained since the breakdown back here, 464, and that's going to be from that breakdown and the divergent high back there, almost a 50%. The stock would be almost cut in half. So plenty of meat left on the bone, still about another 26-28% right now, should that target get hit on Tesla. All right, now back to the indexes, because that's the main focus of this video. What's significant today? Well, here's my BOD, or benefit of the doubt, trend line on QQQ I added several weeks back right there. I had this trend line first, which was broken, and we remained below it. Then we set up, we had a few reactions here and another one recently, and that gives me enough reactions, one off the March lows, March of 2020, 2, 3, a couple candles there, but that's a cluster together. So these are distinct reactions. And then 4 recently, we danced on it for a few days, and now we're below it. So there's a breakdown on QQQ, but again, big level just below. So I talk about give it the benefit of the doubt all the time. Well, that was my BOD, or benefit of the doubt, trend line. But we have very good, very significant price support just below, again, at the top of this recent trading range back here from that last correction. And so that would be the BOD level, or benefit of the doubt, that should open the door for a pretty sharp move down to at least the bottom of that range there, about 310. And so I have the level. Well, there's the recent lows, but again, the top of that range is about 324.65. You can call it 324 to be safe. 324, so yeah, I'd say that should do the trick. A solid close below there, and then the S&P 500, which I'm about to get to. If that does break and we come back down to that 310-ish level right there, you're talking about another 5% downside in QQQ. So remember, QQQ, it's probably my go-to or favorite index to trade, because you get more bang for your buck if you get the call right. Just like if you're bullish or bearish on gold, you can trade gold, or the GLD, the ETF, or you can trade GDX, the gold mining stocks, and you'll almost always get a factor of what gold is doing. In other words, the miners will go up 1 point. There's no set formula, but maybe 1.5, 2 times whatever gold is going up or down, if you're correct on the downside call. Okay, so again, more juice because the QQQ is a more concentrated index, not as diversified, 50% or so tech stocks. And then you have the S&P, which is the broad market. So we need to watch this, because this could just be every now and then you have a correction in tech being the largest sector in the market. And you got to give the S&P 500 credit with that pressure, the weakness we've seen in tech in the market leading FANG stocks, which are also top components, of the S&P 500. Apple, Microsoft, Amazon, Alphabet, Facebook, Tesla, they're all in there as well. Same top components, just a much lower weighting. They're not as top heavy in the S&P 500 as far as their weightings, even though they are still the top weighted components, just a lot less, a couple percentage points instead of high single digits, even double digit. All right, so where am I going with this? We broke trend back here, the primary trend line at the time, back tested it and went up to make a marginal new high, and then added this BOD or benefit of the doubt trend line right there, and we're close, but we're still above it. So that's the big level. To just summarize it all, I think once that goes, as well as, and then they give it the BOD benefit of the doubt support, it's right there. It's showing about 411. So you can call it 410 if you want to round that down. That should do the trick, because a move below 410, especially a solid break, and especially a solid close below that, will have clearly taken us below both the primary uptrend line, the current trend line that I'm looking at, as well as that price support level. And then minimum target would be 397. So from where we're at today, right now, that is about 5.34%. That jives with that next downside target on the daily chart of QQQ. And then bigger picture, don't forget, if that happens, then that's a breakdown, that's a sell signal. Then we go back to the weekly charts here, and we look at the divergences that have been building recently on SPY and QQQ, things like that could indicate a much bigger drop. And where could QQQ go ultimately? Well, I can say this: it has not visited or checked this trend line in a long time. This is a primary trend line off the last bear market lows back here in late 2008, 2009. We had a big correction in the fourth quarter of 2018. We checked it. The COVID drop, I call it, back in March of 2020. We checked it. And that's a potential target, and that's quite a bit lower. So what I'm trying to do here is paint near-term picture, near-term scenarios. If we're just, if this is just going to be a mild correction, we're going to new highs, we're looking at probably another 5% or so. But there's certainly the potential for another drop, and depending on if and when we were to check this trend line again, it'd be about a 30% drop from where we're at now. Just to kind of put it in perspective. And then IWM, don't want to forget about the small caps. Just talk to you about the trend lines on the daily charts, the QQQ and SPY. Well, here's my primary uptrend on IWM. IWM never broke trend until now. So that's why I wanted to do this video today and get this out in video format. So you have the March lows back in 2020. Several distinct and clear reactions along the way since, including more recently. And we're just starting to crack. Now, this is not an impulsive breakdown. It's not a solid sell signal. You can see if I zoom in tight, we kind of broke down and closed right about on it. You have to give a slight margin error. As I like to say on sell signals, on breaks of support, I like to use the slang, the redder the better. Meaning the bigger the red candle, the farther away you get from that trend line, either intraday, especially on a closing basis, the more likely it is to be a solid sell signal. So when you look at it this way, just look at the recent price action where we've been kind of flirting with this trend line right here. That's your range, these candles right here. So we have to take out that low, which is really about right where we're at right now. There was a spike low there, but we snapped back above it. So really much more downside from where we're at right now should do the trick. And that we're at about 221. Well, we're at exactly 221.50. And so much more downside there will have clearly taken IWM below that primary uptrend line on the daily chart. And remember, daily charts always have, at least in my opinion, well, I can say that it should, in anybody's opinion, take priority or precedence over what happens on shorter term time frames. Yeah, active traders can get lost in the world of the 5, 15-minute charts, 60-minute charts, and I love the 60 minutes for swing trading. You get earlier buy and sell signals. They're really nice for timing entries and exits on trades, covering down on short positions or going long on breakouts, but you tend to get more whipsaws the shorter the time frame is. You go out in a longer time frame, the more reliable a buy or sell signal will be, especially on a daily or a closing basis for that time period. And on the daily chart, that means a daily close. Okay, and then I'll just wrap this up. I'll keep this video short so I can get it out to you, and then I'll do another one on trade ideas next. Update commodities, gold. Been following a lot of things lately, as you know, and trading a diversified portfolio, and I think that's the way to go. It's fire. Nobody's always firing on all cylinders, and if one or two cylinders go out, the engine's still going to run. It's like that old. I like to use the analogy of an old V8. Especially in the old days before everything was run on electronics and computers now, but you have a old V8 go out, one cylinder could go, spark plug foul, the engine's still going to run. It's going to sputter and kick a little bit and miss, but 7 cylinders and can even run on 6 cylinders, a lot of the older cars. Anyway, there we go, is looking at NQ NASDAQ 100 futures, right back down to those 2 reaction lows last week. And again, here's the top of the range. That was a resistance support zone, and that runs from, it looks a little tight here to see on the YouTube video, but I have that support zone from where we're at right now, because that's those recent reaction highs, and this one back here. It runs from about 13,383 down to about 13,285, 286 right there. And so pretty much a solid move back down below there. You will have failed this breakout. Remember, this was your breakout. Very impulsive buying put us on a buy signal. And, we had a decent rally out of it, but it's run its course like everything else. Wash, rinse, repeat. It might be an overly simplified trading style, but why make things more complicated than they need to? I look for these divergent highs and get ready to go, out of longs into shorts, and then look for divergent lows, start covering shorts, get ready to go long, divergent highs, divergent lows, swing, swing, swing. So this was our most recent divergent high, and is that all we get for the correction? It's possible. I'll say this like I always do. If you think we're going to new highs from here, then this is where you want to step in and buy. It's objective with a stop somewhat below. And if you think we're going lower and you shorted the breakdown, the sell signal last week, or any of the bounces back up into the bounce target zone, then this would be your next objective short entry, a solid break below it. Give you one additional target right now if you're actively trading and looking for where the first reaction will probably come in. If that level breaks, I'd say it's right there about 13,152. Yeah, give or take. Quite a few reactions there. Then another one right here. Again, these are the areas within that trading range right there. And then down to about 1204. That was, by the way, that second level was 12,994. And then 12,704 on the bottom there. All right, so those are some potential targets there as support levels too, buy and sell opportunities depending on how you're looking at it. And let me look at ES and RTY, and I'll wrap this video up. ES or the S&P 500 futures, again, hanging in there, mainly due to financials and some other sectors, industrials, that have been holding up recently. But nothing's changed from the technical posture for a long time now. We started diverging back here. We had negative divergence, built up to that point, played out for just a little correction right there, that divergent high. Then we went up, made a marginal new high here, extended the divergence at that point. And I just keep moving the lines. It's like, in football, you get a first down, they move the markers. They're reset, and that's what has happened here. Each time we get a little correction, this is the same divergence. It's just much larger. So these are just little corrections within there, and then ultimately, or usually, the bigger the divergence, the bigger the correction. This was a little small divergent high right here, right? Small little correction. That was a relatively small divergent low, relatively small rally. little bit bigger divergent low, a little bit bigger rally. So that has the potential to take us down, but this is still my magic number, and it has been for a while. We need to take out that 4100 level to open the door for a much deeper correction in ES. And then finally, last but not least, RTY. I already gave you that on the daily chart of IWM. That's probably the more significant level. When you come down here to the 60-minute chart, as you can see, we're kind of grinding around. We had a nice sell signal back here with that divergent high and trend line break. First target was hit right here. Second target zone was hit right here. We overshot that a little bit, put in positive divergence, and that set the way for this rally. Another divergent low right there, and a little bit of a rally. Just kind of sloppy, mostly sideways trading. And this, again, if you recall that daily chart of IWM I just showed you, this is the Russell 2000 flirting with primary uptrend line support on the more significant daily chart right here, all these reactions recently. And so kind of like I said there in that on that daily chart, if you look at that recent range, we can take this out by quite a bit, put a big candle down through here. That's not only going to take us below this recent trading range, which in itself is bearish, but it will also have taken us below that longer term trend line on the daily chart, which you can't see here because we're only going back a couple months on this chart. So those are levels to watch, and then I think you can see the micro levels. We're at support right now, 222 or 2222, 22. We'll call that 2200. And then last chance support down here around 2159, I think 2160 we'll call that. And then it gets pretty thin down below. So there's still work to be done, and you know, this has been the MO recently. Maybe that continues for a while. Maybe the buyers step in and break us above this range, and that's what you want to see, break above the recent highs. Bearish if you break below the recent lows. All right, that's it. I said I'd stick with only the major equity indexes, so we'll do that here, and then I'll continue to update the as many of the trade ideas that I've highlighted recently. Remember, what I try to do is do updates on trade ideas when there's something significant and worth noting. Sometimes I do miss some, so by all means, bump me under the comments section if I've missed something that I've updated recently, and then, of course, any new trade ideas, I'm always on the lookout for those. So scanning charts all day long, and if you post something in the comments section, hey, what about this? I'll take a look at that as well. But for now, let's wrap this video up, get it out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.